stocks which has actually done extremely well over the last month or so is Electronics Mart. And this despite, there being some concerns over demand in the first quarter on account of uncertain weather and unseasonal rains impacting sales for ACs. What's going on in the consumer durable space? We heard from Vijay Sales yesterday. We heard from the analyst of Goldman Sachs yesterday as well. But let's hear out from the person who actually sells these electronics. Premchand Devarakonda, the CFO of Electronics Mart India, joins in. Thanks a lot, Mr. Devarakonda, for joining in. You had earlier said that, first quarter AC sales, some AC sales were impacted by unseasonal rains. Now we've come towards the end of the quarter so far. How does the business look? How has business footfalls as well as sales been in the first quarter?
Yeah, good morning and thank you very much for having me on your show. As I mentioned earlier, the first 2 months of this quarter for air conditioners is quite disappointing because of unseasonal rains and also early monsoons. But in the month of June, there has been little improvement in all categories. In fact, during the first 2 months also, the other categories did decently and also they have shown decent single-digit growth. So as we are approaching the quarter end, this is going to be one of the really not encouraging quarters. In spite of that, we are quite confident that having seen the growth, having seen the performance of these categories during the last 3 weeks, we have seen. We are quite optimistic that if you look at the first half year of this year, I think there would be definitely decent performance in all the categories.
So you hold on to the 12% revenue growth guidance and 6 to 7% same-store sales guidance that you had given earlier, right?
Yeah, that is what we have been targeting, and we're quite confident that that would be achievable.
All right, sir, just to quiz you a little bit more on what you said, large appliances are around 45% of your mix, I think so. And ACs would come in that. ACs as a percentage of large appliances would be how much?
As a total percentage, it will be around 15%.
15%
of the top line. Oh. And if I take only the large appliances category, it will be around 30%.
30%. Got it. All right. That fits in then. So you're saying the remaining part of the business has done pretty well. Good to hear that. The NCR business is a smaller part of the business, but margins over there, are a little bit lower. How do you see the margin recovery in the NCR business? And for the company on the whole, what kind of a band should we work with?
NCR, we are new in NCR. So initially our our store launch expenses and advertisement expenses as a percentage of the contribution coming from NCR region is quite high. As a result, there were truncated margins from NCR. As the throughput from the stores, which we started in the last 24 months, has gone up remarkably. So this year we are expecting that NCR would be break even at PBT level.
All right. So you will break even by when did you say?
It will be breaking even in the current year.
In the current year is where NCR will break in. But South business, which is a mature business, has 7% margins and nearly 6,000 crores in terms of sales. NCR is flat with about 500 crores in sales. What we are given to understand is that the total addressable market in NCR is a lot bigger than that it is in South. So what is your growth plan for NCR and how do you plan the revenue mix between NCR and South to change over the next few years? Because NCR, while it's a big market, I'm sure it's also a lot more competitive, which we can see in your margins.
Yeah. Product mix wise is more or less same, both Hyderabad as well as NCR. Whereas the store growth potential is much higher as compared to Hyderabad. So in fact, in Hyderabad, we are averaging more than 70 crores per store. And in NCR, our target is much higher than that. So that is achievable in the near future.
So you have 28 stores in NCR right now with close to 500 crores in terms of sales. If you do about 75 crores, you should have been doing a lot more in NCR, right, per store?
That's what there is high potential in NCR. So in the next 24 months, we will definitely target about 50 crores per store from NCR, and it is achievable. In fact, a couple of stores are already on the path of achieving the targeted throughput.
Okay, what about the working capital days, sir? Over the last few years, I'm looking at it from the mid 60s, it's moved to around 80. Where will this number stabilize at?
Sir, it will be around 60. So that is our target. We have to bring it down to 60. And also, if you look at the figures as on 31st March, obviously it is the start of the season. As a result, we will be having huge investment getting into these inventories. As a result, that rate, the number, working capital days look higher. But if you take the average for the entire year, it is below 60. And we have to maintain the working capital days around 60 days, and that is our target.
All right, so 60 is your working capital days target. You plan to open how many outlets in the next 12 months? I remember you were looking to open, 6-7 outlets in NCR this year. And how many outlets do you plan to open on an overall basis over the next 1 to 3 years?
This year, we're targeting 30 plus stores, out of which 6 will be in NCR, and the remaining will be in South Cluster. And next year also, we are having the similar target, and we might expand to the other regions like Western UP, Orissa. These are the other markets we are targeting in the near future, in the next 12 months, in fact.
All right. And what would your ideal mix of products be? Because large appliances, at one point I remember they were nearly 2/3 of your revenue, but everyone's looking to buy mobiles. Mobile doesn't do much in margins, right? So, I mean, how do you plan your revenue mix to be going forward?
See, revenue mix is not under our control. It is decided by the market demand. So, and second thing, like in case of mobiles, the churn is much higher as compared to large appliances. And over the next 2-3 years, I think the product mix, the sales mix will remain more or less.
All right, we take that point. Thank you so much, Mr. Devarakonda, for joining in. You are fairly confident of achieving that 12% revenue growth this year with 6 to 7% same-store sales growth, looking to maintain margins in that 6 to 7% band. A growth opportunity in NCR is still awaited. In fact, you are investing behind that, and you're looking at geographies like Western UP, etc. as well.